Coming to you live Thursday at 3:30 p.m. The Insurance Guru is back on WOLB Radio at Radio 1 and Saturday at 11 a.m. on Praise 106.1. Hello, welcome to the Insurance Guru Show, where we talk about all things insurance. My name is Ramona Jones McClain, and I'm a farmer's agent at 6 Hanover Road, Reisterstown, Maryland. You can call me anytime at 443-660-7131. Hello, this is Ramona Jones McClain, and I am your insurance guru. And I am here to talk to you about all things insurance. And yes, you know, as we have been doing all month, this is fraud month. Next month, I think we're going to talk about what you should be thankful for and how you should be taking care of those things you are thankful for in your life. And I think we're going to start the first show in November talking about wills and how to take care of those that you love when you are no longer here. So we're going to talk about wills and testaments and how to set up an estate and what you should do to protect your estate. But this week we are talking about fraud. We're talking about fraud claims with regards to homeowners claims. And just to get this out of the way, I'm going to do some housekeeping. We want to thank our sponsor, JL Care Home Again 2 Enterprise. JL Care Enterprises at Home Again 2. They are an assisted living facility in Catonsville, Maryland. And this is their dignity pledge. This is your home, and your comfort is our first priority. We strive to create a caring, professional environment that will allow you to maintain a dignified standard of living. Home Again 2 provides residents with the experience of living with assistance and dignity in a loving environment. If you have a loved one that needs some assistance, that can no longer live alone, or you're concerned is not properly taking their medication, you can call Home Again 2. They're located at 6 Aldershot Road in Catonsville, Maryland. Their phone number is 410-719-8520. That's 410-719-8520. And that's Home Again 2, assisted living facility located at 601 Aldershot Road in Catonsville, Maryland. And now, also, too, I want to tell you that today we're talking about homeowners insurance and fraud. And if you want to call into the station, I have questions. You can call in at 410-481-1010. And the call monitor system is not up, so I can't see it. But you can still call at 410-481-1010. So let's get into it. So everybody knows what a home is. And we're talking about a home, whether you own it or whether you rent it. Okay? Homeowners insurance fraud is when someone submits an inflated claim on their homeowners or renter's policy to receive or get more compensation than the actual value of loss or damage. It can also be a situation where there wasn't actually real damage, but you created the damage to file a claim. Overstating the value of stolen items. You know, somebody breaks in your car, or they try to break in your car. Now, all of a sudden, you had 2 laptops in your trunk, or several other types of electronic equipment that normally is kept in the house, but it was in your trunk because you were supposedly moving it somewhere. That is inflating or overstating the value of stolen items. Lying about the extent, cause, date, or location of the damage. Sometimes homeowners will lie on their claim that the damage was more than what it was worth. intentionally damaging property to make a claim. Homeowners often damage, break, and destroy things in their own name to be able to file a claim, fabricating bills or receipts. Homeowners may go as far as to create their own receipts of the repair costs and or the amount stolen so the insurance company will pay them more. In general, fraudulent homeowners claims affect everyone. They increase your rates because your loss ratios for that particular zip code or area go up. Just because you get a payout on your premium, just because you get a good payout, does not mean your premium is not going to increase. Because they have to, remember we talked about this a couple of weeks ago, have to have enough money in reserves to cover any potential losses that may be catastrophic in the future. What are our catastrophic losses? Hurricane, tornadoes, water damage, mudslides. Even though mudslides and floods are covered under flood policy, landslides. These are catastrophic, lightning strikes, catastrophic acts of God that you want to make sure there's enough money in the pool to cover you and your neighbor and anyone else that may be affected. Committing homeowners insurance fraud can be substantial and long-lasting with heavy fines. That could be anywhere up to $15,000 in fines, or even could lead up to 1 to 10-year jail sentence, depending on the severity of it. How can you detect homeowners fraud? First of all, delayed reporting of a claim. There have been instances where somebody calls in and says, hey, I want to go with my policy. Do I have this, that, and that on it? And no, they don't. Not to mention, we've been calling them now for 2 months, 2 years, 3 years, saying, hey, we need to review your policy. Your coverage may not be adequate. We need to do an FFR and go over what's on your policy. They don't have time. They're not interested. But now they want to know what's on their policy. We go over it. They say, well, I think I need to have that on my policy. I think I need to have this on my policy. One very good example of that is backup sewer and drainage. Now, I'll tell anyone, I will not write a homeowners in this state without backup sewer and drainage on it. Backup sewer and drainage covers your water losses that are a result of a backed up sump pump, sewer line, or sudden escapage of water from the heating and plumbing system. These usually occur in the lower level, and usually when they do, they cause massive damage. It costs sometimes $3,000 just to pump the water out. That does not include replacing the drywall or repairing or replacing any furniture that may have been existing in your club basement. Back in the day, backup sewer and drainage was minimal cost, $2,500. That's barely enough to even cover the water removal these days. A few years ago, we started going down the list, calling homeowners and say, hey, we need to review your coverage. We need to go over some things with you to include backup sewer and drainage. Then I had one client that never had time. Then he called me out of the blue. I think I need flood coverage. So we quoted him, and he wanted his mortgage company to cover it, but they wouldn't because it's not mandated because he's not in the flood zone. Now, what he didn't know was that the water that was sitting in his basement was not a flood, that there's a specific definition that qualifies it as a flood. We'll go over that on another show. We'll do a whole show on flood. There's a specific definition that qualifies it as a flood. What he did have was a backup sewer and drainage claim, and unfortunately, there was not enough coverage to cover what needed to happen, and he figured that out on his own. But he thought he would call in and try to fool me and say, I need flood coverage. So we quoted him a flood. He didn't want to pay it out of pocket because flood requires you to pay it in full. You can't bill that because it's mandated and monitored and managed by FEMA under a federal program, and they don't let you pay it. They don't let you bill that out. You got to pay that in full. So he didn't want to pay it in full. So another couple months went by, and he said, "Oh, I think I need to get this flood policy again." Finally, I said, "Okay, red flag number 2. What's going on?" Well, finally he tells me I got this water in my basement, blah, 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 blah. I said, well, you have backup sewer and drainage, and we have been calling you, asking you about increasing it. Because right now it's only $2,500. Oh, that's enough. My basement alone was renovated for $5,000. Well, we have been calling you for the last 2 years, telling you that we need to review your policy and look at increasing your coverage. And that's one of the questions we have asked when we do our Farmers Friendly Review. Have you recently renovated any part of your house? Of course, at that time, he wanted to say, well, can we increase the cover now? Of course we can, but it will not apply to this current claim. He was outraged and very upset. Well, we have been calling you, and you did not want to make time for it. In short, he filed a claim. It barely covered the water removal. His beautiful basement that he had spent, as he said, $5,000, he had to come out of his pocket to repair it himself. He got upset. He filed a claim against the insurance commissioner. And the first thing they asked us for was our notes, our documentation. Now, I love this client, and I did not want to do anything to disparage or make his situation worse. However, I had to send them all of our documentation and our records showing how we tried to contact him for 2 years to review his policies that were enforced, and he refused the FFR, the Farmers Friendly Review. The insurance commissioner saw that documentation, also saw that he had called us twice to get a flood quote and did not follow through with it and refused his claim. Now, these things happen, but in the midst of this, to get around the fact that he did not do his due diligence, but we did, he attempted to add the coverage on, even though he knew that there was already a claim actively going. That's fraud. That's just fraud straight out. And if they had followed through with it, he would have gotten caught. He could have gotten fined. They would have canceled. Insurance companies will cancel your coverage. And it'll go on your record. It'll go on your Nexus report. The Nexus report is like Equifax for insurance. It's where insurance companies that are standard companies report losses and claims and issues to them. And so when you go to any other insurance company, your record shows up. The companies that don't report to Nexus Lexus are not considered standard companies, and most of the standard companies won't approve them as quote-unquote prior insurance because they cannot validate your history with them. So, and that's a big issue with fraud. Increases in policy limits shortly before an alleged loss occurs. Now, I'm not saying that these things don't happen. I've had clients where we've called on the FFR, we've increased coverages, we've moved coverages around, and a month later they call with a claim. These things happen. That's coincidental. But to increase your coverage knowing that you're in an active claim is fraud. And that affects insurance rates. That increases loss ratios. And it's not as if somebody's trying to take money from you. That's not how this occurs. So my guest today is going to be Mr. Mike Derlewanger. He is a public adjuster that works with homeowners of fire claims. Let's see. Hi, Mike. Did I get him on? Mike?
Can you hear me?
Yes, I can. How are you?
I'm good. How are you?
I'm being technologically challenged here on the
I understand.
on the board. So, hey, how you doing today?
I'm okay. How are you?
Excellent. So, I called you so we could talk about fraudulent claims and on the homeowners insurance in this area. We were talking the other day, and you were telling me about your experience and some of the greatest issues that you encountered. Can you go over that with me again?
Sure. So just a little bit about me. I own a public adjuster firm named Dontrio LLC, reputable public adjuster firm, been in the area for a while. And I'm also the first public adjuster in the state of Maryland that was licensed as a general contractor. So I know a lot about where the insurance fraud can occur, where it does occur, just from that background. And yesterday was actually the first day that I've made my license for contractor inactive because I haven't done any contracting for a while. So I actually just switched over to that. But I do a lot of consulting for contractors and against contractors, court cases and things like that come up. In 2013, an issue had come to the Maryland General Assembly that was of significance, at least the insurance companies felt it was very significant, regarding insurance fraud, and it was the waiver of deductibles. Contractors, in particular storm restoration contractors, were offering incentives to sign contracts with them, and they were offering to waive deductibles, give credits back for deductibles, refund deductibles, et cetera, et cetera. And what that amounts to, obviously, is insurance fraud, because when they submit their bill to the insurance company, they're submitting their bill for the entire amount of the insurance claim, yet they have refunded or credited or discounted a certain portion of that claim that they're not informing the insurance company about. So the insurance company, deductibles usually range, I haven't seen too many $100 and $250 recently, but usually range from $500 up to 5% of a policy. So you're talking many thousands of dollars on a lot of the claims, and that's a lot of money. It adds up when it's happening widespread. And when it comes to storm damage, it is widespread because these guys that are in the contracting industry go into neighborhoods and they literally knock every door in the neighborhood, sign everybody, offer to waive everybody's deductible, regardless of insurance carrier, regardless of level of damage, et cetera, et cetera. So, when you're looking at it from that perspective, it adds up. You're, many thousands of dollars on just a single street alone, and that can be something that adds up to a lot of insurance fraud, resulting in higher insurance rates for all of us that pay for those insurance policies throughout the state of Maryland. So that is a primary means of insurance fraud, is deductible waivers from contractors. And this applies in commercial claims as well, but commercial claims aren't regulated as heavily as home improvement claims. So I do both commercial and residential, but where we saw the law change was directed specifically at home improvement contractors. That's where the highest fraud was found to be. Wow.
And so you mentioned that if in fact someone is caught doing this, that there is a fine.
Yeah.
And the fine is how much? You said it was 2%?
Three times the amount of the claim. So if a contractor waives let's say it's $1,000 deductible, which is a pretty standard amount.
Right.
If they waive that $1,000 deductible, they face a potential fine of 3 times the amount of the insurance claim. So on a $30,000 insurance claim, that's a $90,000 fine. And they could also face up to 15 years in prison. The judge, according to the law, the judge has a right to waive the prison time, but does not have the discretion to reduce the fine, which is very interesting. So if they decided to aggressively prosecute under this law, they would quickly put a lot of bad contractors out of business.
Wow. So basically, because you wanted to save somebody $1,000, you
could lose your whole company.
You didn't make any money on this. You, in fact, lost money. Just for the sake of getting a job. It's just not worth it.
Yeah, you and I see that, but apparently there's a lot of people who, cut off their nose to spite their face, for lack of a better term, I guess.
Right.
And make that mistake on a regular basis. I mean, up until, I would say, this summer, and I don't know because I haven't been searching lately, but up until this summer, I was still seeing ads routinely saying, we'll credit this part of your deductible, we'll waive your deductible and things like that. I'm talking ads on the internet, ads on TV. And the MHIC and the Maryland Insurance Administration are pretty responsive when these issues get reported to them. They do usually reach out and send a cease and desist letter to the contractor first to give them a chance to comply, and then they usually only pursue additional action if they fail to comply. But it's front page stuff on the NHIC website and things like that. So if you have a contractor's license, you should definitely be aware of it. I mean, I've kept my contractor's license for many years after stopping using it, and I always pay attention to the bulletins that I get sent in email, to the letters that come in my renewal package and things like that, because the laws do change. And if you don't stay up to speed on those things, then you may be ineligible to renew, or you could become a felon. In this instance, it's a felony to do the deductible waiver, and it doesn't matter how small it is. So $500, when you're talking a theft, usually it has to be over $500 for it to be a felony. Well, I've seen some very old insurance policies that have $100 or $250 deductibles. If you waive that deductible, that's a felony. Is it worth it? Is it worth it? I mean, there's a lot of rights you lose when you're a convicted felon. So, to say that
not being able to vote.
To own firearms, to vote, to travel freely and things like that. There's a lot of things that can come into play,
right.
And it's just for somebody to, if you encounter a contractor who puts an offer before you and says, "I'm willing to waive your deductible if you sign with me," that should raise such an incredibly large red flag to any homeowner, because this is somebody who's willing to be a felon to get your job. And that's the kind of level of understanding that I think policyholders need to have for people who are willing to cut corners to get jobs.
Because if
do you have somebody that's willing to do that?
They're going to take a shortcut to get your money out of your pocket, then they're going to shortcut everything that's part of the job. You can't trust them to do anything legitimately in your job. This is funny. I'm in a situation today, Mike. Before I came here, we're doing some renovations at my house, and I met with a Carroll County electrician who is basically coming in because we fired our prior contractor and finishing up a job. When he comes in, to some degree, he literally almost has to start over because they took so many shortcuts trying to, I guess, get as much of the money as they could, and then they just disappeared. We needed them to continue to come on a consistent and regular basis, and they just started coming one day a week, and then one week they didn't come at all. And we're texting and calling, saying, we're literally living in squalor now, no floors, and they're like, "Oh, we're coming. We got this going on," and we haven't seen them. So I of course I fired them and brought somebody else out there. And I don't know if you believe in God, but I thank God that I heard this person said to do it. Like, you need to get rid of them now and get somebody real out there. And we're finding all kind of stuff that wasn't done right, and even to the point that they didn't even pull permits, and they told us that they did. And so I agree that you have to watch contractors and understand who's in front of you. And I wish there was, I know we have Angie's List, but I wish that there was some kind of consulting board where we could go and say, is this right? This is what they gave me. And I know you're supposed to get like 3 different estimates or whatever, but still, if you're a layperson, and especially, when you have a claim, it is literally one of the most worst days of your life.
Yeah.
It's water standing in your basement. Your ceiling is falling in. There's a car that is driven into the side of your house. Only thing you're thinking about is, I want this done, and I want this done as quickly as possible. And I think customers need to know that anything worth doing is worth doing right.
Absolutely. Anybody that will, like you said, anybody that will cut a corner and anybody that will go to the length to be willing to come and be a felon is not somebody you want to do business with, because if they have no integrity and they have no ethics when it comes to their licensing, why would they be expected to have any integrity and ethics when it comes to their handling of contracting your job?
Right. Definitely. Well, any other red flags that we should maybe take a look at or be aware of as consumers?
Obviously, as consumers, sometimes, especially in this day and age with COVID, I think that one of the greater risks, and I don't want to, you sell insurance, so I'm not going to go down this road too far, but insurance companies commit insurance fraud too. They don't pay for claims and jobs the way that they're supposed to, even when they know that that's how they're supposed to pay for them. So in instances like that, they are, in fact, committing insurance fraud. You pay a premium and you're not getting what you paid for. And I'm not talking about where it's an honest mistake or a difference of opinion. I'm talking about where they overtly ignore evidence, don't pay a claim properly. They're committing insurance fraud as well. So it does happen, and there is a process through the Maryland Insurance Administration to file a formal complaint for bad faith. And, I would suggest anybody that has a question about that, look to the Maryland Insurance Administration website to learn more about that. But one of the other potential areas for policyholders that is problematic is right now with COVID, a lot of the insurance companies are understaffed, and they have very young, inexperienced adjusters working on claims. In the state of Maryland, insurance adjusters that work for companies are not required to be licensed like I am. Mm-hmm. So there's no credentialing process for them. There's no minimum requirements for them. And as a result, you're going to get somebody who may just let stuff slide through that shouldn't slide through and things like that. But just a note of caution for anybody that's having an insurance claim right now. The temptation to inflate the claim beyond what it should be may be there, but it's very important that you do not do that, because just because an inexperienced adjuster is handling it and may rubber stamp it and slide it on up the ladder doesn't mean that there isn't someone else looking over their shoulder in that company who will catch those things in an audit, and then you come into a special investigation and you could criminally be charged with insurance fraud yourself as a policyholder because you decided to say that $150 Blu-ray player cost you $450 or something along those lines. So
right.
Just a word of caution is avoid the temptation to inflate a claim, avoid the temptation to claim things that aren't actually missing or lost or destroyed. Because you'll have some inexperienced adjusters who may just rubber stamp things and slide them through, but they don't ultimately always have the final say. A lot of these folks do have auditors, and they have people looking over their shoulder to make sure that even the insurance company's best interests are taken into heart.
Right. Under what conditions would you recommend or would you suggest this consumer call a public adjuster like yourself?
Most any fire or water damage claim that involves any structural damage. So, there's very few fire claims that a policyholder probably wants to handle on their own. And water damage claims, usually if they are any larger than an area of unfinished basement. So if you have a water damage claim in an unfinished area of your basement, probably not a big deal. Insurance company will probably pay for whatever little bit of drywall is there. They'll pay to mop up the concrete floor, and they'll pay to dry the structure. But if it's more extensive than that, and you have furniture damaged, and you have carpet and cabinetry and electrical wiring and lighting damaged by water, in those instances, you definitely want to have some assistance.
Right.
When you think about it like this, the insurance company sends somebody to at least 2 weeks of training. That's pretty much the standard for insurance companies. And that person's job is to watch the insurance company's bottom line. Mm-hmm. That's their job. Let's be clear about that. Their job is not to write you a big fat check. Their job is to watch you.
Their job is to pay you the least amount as possible.
Yes, exactly. And so keeping that in mind, they are going to, they're not very well trained, especially at the lower level for the most part. And as a result, that's good for the insurance company because if they don't invest a whole lot in training them, they're never going to learn how to write a proper estimate. If they don't write a proper estimate, they're going to pay less than they should, not more, less.
Right.
And as a result, you as the policyholder, a lot of policyholders get a check from the insurance company on the first day and think that is great. The insurance company took care of me. They wrote me a $3,000 check on day one. You might have $30,000 worth of damage. As a matter of fact, I would venture to guess that if you got a $3,000 check on the first day of an inspection, you probably do have a $30,000 insurance claim. Literally, that is a tactic to get you to look away. And
right, because if you cash the check.
No, you can cash it. You're not on the hook for it. Maryland outlawed that a while ago.
Okay,
so you can cash the check, and that means you're not accepting responsibility. That doesn't mean you're accepting the settlement. As a matter of fact, it's unlawful for an insurance company to mark a payment in such a manner that would lead one to believe that the claim is settled and that you have agreed to settle it for this dollar amount. So insurance companies are prohibited from that. You can always come back in what's called supplement, which is, hey, we found additional damages or we think your estimate's low, so we're going to submit some other contractor information, and that's going to drive that cost up. A lot of claims go on for months and months and months as the result of supplements. So
right.
You definitely can continue to pursue a claim after you receive an initial check. But if they write you a check on day one, rest assured of one thing. They recognize that that's a good bargain for them. That's a good deal for them, not for the policyholder. And that doesn't matter whether it's a commercial claim or a residential claim. The only exception would be if they write a policy limit check on day one, which almost no adjuster in the state of Maryland has the authority to do that. So even if it's a policy limit claim, you'll never see that check on day one. But if you get a check on day one, chances are you're being underpaid.
Maybe it's a check for you to temporarily just go somewhere to stay.
Well, yeah, I'm talking about repair check.
Okay.
Yeah, of course, they should give you an advance. In most cases, if your home becomes uninhabitable, they should give you a payment, in advance, usually against your personal property, that will allow you to go stay in a hotel or something along those lines until everything is sorted out and your claim is settled. So
right.
There is that. That payment is not what I'm speaking of. I'm speaking specifically of repairs.
Right.
So if they write an estimate right there on the spot for your repairs and they issue a check right then and there on the spot, chances are you're being underpaid, and I mean dramatically, very, very dramatically.
So what should a customer do? They get a check for $3,000 and it's a whole lot. What should they do? What should their next step be? To call you?
Well, so generally speaking, the best time to call a public adjuster is before you file the claim, because a lot of claims that you may go to file aren't covered. So there's a lot of exclusions in insurance policy.
Yes.
Agents that are good, like yourself, are going to explain the exclusions. Agents that are not as good or newer to the industry or maybe even dishonest are not going to explain the exclusions, and they're going to leave it as if you have coverage for everything under the sun when you don't.
Right.
Blood coverage is not in a homeowner standard insurance policy.
Nope.
And then there's lots of other things. So if I'll give you an example of one thing that gets a lot of homeowners into trouble is they wait on something to go bad until it gets really bad. And so there's an exclusion in almost every policy sold in the state of Maryland, commercial and residential, against continuous and ongoing seepage of water.
Yep.
And if you have a small pipe leak or something like that, and you notice a wet spot on your ceiling and you just leave it going and going until your ceiling caves in, well, how long did it go on? Well, it's been going on since August. Okay, well, we're in October now. So that policy exclusion reads something along the lines of, if it continues for a period of weeks, months, or years. I don't know why you need to add the months or years in there, but that's what the policies generally say. Weeks is all you need, which means 14 days or more. If that water damage has been accruing over 14 days or more, they can exclude that claim completely, deny the claim completely. And most policyholders don't know that. So that's why I would suggest before you file a claim, call a public adjuster, especially if it's a claim of any significant size.
Yeah.
So that we can educate you and say, hey, because we do this for free all the time. We evaluate the claims. Now, we don't necessarily send someone out, especially in the days of COVID, but, with cell phones and photos, you can send me pictures. You can tell me what's going on, how long it's been going on. And I'll be able to tell you right away by reviewing the photographs as well as any other information that you may have, whether you have a covered claim or not, and whether you need our help or not. So we're in the business of under-promising and over-delivering. We're never going to tell you you need us if you don't. That doesn't help us.
Right. I got a caller that's got a question. I'm going to bring her in. Sarah?
Okay.
Hi,
yes,
Sarah. You have a question?
I really do. I have a question about, I'm finding that some companies are reluctant to write policies unless you agree to a replacement policy. Is that normal?
That is not abnormal. Replacement cost policies are basically a guarantee, depending on how the policy is written and the language in the policy, that they are not just going to cover a claim for depreciation, but they're going to make sure that they restore you back to where you were prior to the loss. Okay, that's the difference between a replacement cost and a actual cash value policy. Can they require it? It depends on, Mike, I believe they can require it because of the list of, or the type of claims that have happened in the past and the complaints that have been in place when people are expecting to be restored, and because of the type of policy they have, they're not.
Yeah, and some carriers may not offer replacement cost value policies at all, and they only offer actual cash value, or they may offer only actual cash value on certain items, roofs in particular. You really don't want an actual cash value policy because you're probably not going to end up saving a ton of money, but what you're guaranteed is that you'll get less money than you need to put the place back together if you have an actual cash value policy. So I under no circumstances would recommend an actual cash value policy unless it was the only option you had to purchase insurance for that property.
And in addition to that, one of the reasons probably why insurance companies are enforcing that, because if they give you actual cash value money, you can take that money and do what you want to with it and never repair the damage. Then another claim occurs, and now the prior damage gets added to the new damage, and that's not really quite kosher. They give you the money on the concept that you will fix what was broken. Okay? So
well, then let me ask you this then. So replacement doesn't mean that they replace everything. If the house falls down or burns down, they'll have it rebuilt or have it.
Yes, that means that they will rebuild your house for what the replacement cost value estimate has stated it was.
Okay, well, let me ask you this. Well, why is it that when you have a claim, other companies don't want to insure you, when in fact you have insurance so that you can, get back to where you were? Why is it other companies, they say, well, you've had a claim, so, we're not going to insure you? Okay,
so the caller's question is, why does people not want to insure you when you've had a claim? It depends on the nature of the claim. Most insurance companies, at least the standard, the big ones, will not count against you acts of God. So they can't blame you for a hurricane coming through or a flood. It's those kind of claims that are repeatedly. You've got 3 theft claims. You got 3 vandalism claims, because the expectation is that you will do something that will create an environment where that lessens the probability of these claims. And if they are recurring repeatedly, the perception is that you are contributing in some way.
I see.
Primarily, Sarah, probably through a lack of maintenance. So pipe leaks would be an instance of that. A lot of people have suffered copper pipe leaks before they changed water chemistry throughout the state of Maryland. And as a result, insurance companies would get 2 and 3 and 4 claims from one individual home over the course of a 2 or 3 year period. In those instances, they have to, they're obviously for-profit companies. They literally have to look at, is there too much risk here for us to insure this property? In other words, are we going to pay out far, far more than we could ever recoup? And at that point, they can make a business decision, because they are a for-profit business, not to offer coverage again, not to renew your policy. And then other carriers may look at it and say, I'm also not willing to insure your property. The state of Maryland does have an insurer of last resort for both automobiles and for property. So there is, it's I think called the Joint Insurance Association.
Yes, the Joint Insurance Association, yes.
Yeah, so you can get insurance.
You're saying the Joint Insurance?
The Joint Insurance Association, JIA. But listen, guys, if you want to hold on, Sarah, I got 2 more callers on hold. We got to take a station break. Laura and Brother Carlos, please hold on. We'll be right back with you. Thank you so much. We'll be right back. Thank you.
WOLB Baltimore and WERQ FM HD3 Baltimore, an Urban One radio station, minority controlled and operated and serving the African American community for over 40 years.
The views and opinions of the guest and host you hear are not necessarily those of the staff and management of Radio One, its sponsors, or advertisers.
Why do my rates keep going up and I've never had an accident?
My homeowner's claim was declined. What am I going to do now?
The Insurance Guru has the answers. Tune in to your Insurance Guru every Thursday at 3:30 p.m. on WOLB, where we talk about all things insurance. We know a thing or two because we've seen a thing or two. This week's show is sponsored by Home Again 2, providing safe and caring housing for seniors who are no longer able or desire to live alone. Home Again 2 provides residents the experience of living with assistance and dignity in a loving environment. This is your home, and your comfort is our first priority. We are family. Please call 410-719-8520 or email at 787nadines@gmail.com or visit our website at jlcenterprise-homeagain2.com.
All right. Thank you, guys. Thank you for coming back. We lost Sarah, but Sarah, please call the office at 443-660-7131. We'll go over whatever your options are. And if you're looking for coverage, we can make sure we can get some in place for you. Thank you, Laura, for calling. You're on the phone with me, Ramona, and Mike.
Thank you all so much for this excellent information. I wanted to ask, can you ask Mike, if we found we would need him, does the homeowner, we go ahead and pay him ourselves if we find we have a claim that we want him to review?
So a public adjuster works on a contingency basis, much like an attorney would, for example, in an auto accident, except everything we do is out of court, of course. So basically, it's a pretty good risk for you as a policyholder. If you needed us, then we wouldn't get paid if you didn't get paid. There would be no money to pay us. And the money comes out of the insurance claim. We are probably unique in the fact that as far as public adjuster firms go, we do partner with a number of contractors who would basically be able to do all of your insurance work for you, even after our fee is covered. So that's something that you can certainly call our office about and ask about if you have an active insurance claim. If it's an older claim and you want to have it looked at to be reopened or something along those lines, we'd be happy to go over that with you as well. And again, it's a contingency fee. It's based upon whatever is recovered in the insurance settlement. So there's no per se out-of-pocket expense for you. If we don't recover anything, there's no fee for us.
And you can reach Mike at 240-678 7227.
Thank you.
Right. That's my direct cell number, 240-678-7227.
Okay. Is there an office number you want us to give out, Mike?
Yeah. Our office number is 301-971-4040. And the company is Dottrio, DOTTRIO, LLC. And if you Google search mail and public adjusters, will come up numerous times on the front page of Google.
Thank you. Thank you both. Keep up the excellent work.
Absolutely. Thank you. We got another caller. Okay. Brother Carlos?
Good afternoon. I agree. Very important information. Many times people will say, well, why am I paying premiums? You know, if I pay my premiums and I paid them for 10 or 20 years, I should be covered, regardless of the situation. That is a mindset that the insurance companies do not embrace. I want to ask you, out on your homeowners policy, to explain the hurricane deductible as in comparison to your normal deductible. My understanding is that the hurricane deductible may be on a percentage basis that may be many thousands of dollars more than your regular deductible. And also, if you have dogs and people love their dogs, what impact do different dogs, breeds of dogs in your household have on you being able to get insurance coverage?
Okay, so that's two questions. Let's deal with the first one first, the hurricane. So in the state of Maryland, and I don't think it's like that in every state, Mike, but in the state of Maryland, the governor has to declare it a hurricane for it to be a hurricane, correct?
Correct. Someone in the authority position with governmental consent, with the governor's consent, can do it, but it may not have to be the governor personally who does it. But generally that would come from the insurance administration, whether they're allowing something to be considered a hurricane for the purposes of enforcing that deductible.
Right. And then and not that it is, you can't have hurricane damage and it not be extensive damage. But I honestly, one of my explanations to my policyholders is, first of all, the governor has to declare it. And I don't think, as long as I've lived in Maryland, he ever has. Even the last situation, which I think it was Governor O'Malley, he deliberately declared something a tropical storm so that hurricane deductible will not go into effect. But if a hurricane hits your house, we're not talking about a couple $1,000s. Your house is gone. Your replacement cost factors is going to kick in. Do you not agree, Mike? Hello?
I absolutely agree. I'm sorry, I was muted just to make sure I'm not talking. But yes, no, I absolutely agree.
And so you do have an opportunity, however, to make adjustments. I do know that there are some insurance companies out there that require a 1% hurricane deductible. They won't provide you with anything less. But that's why the market exists, for you to go out and find different carriers that will provide you with the coverage that you desire at the cost that you want to pay. Okay, and there are a lot of them out there that do variety of different things.
Yeah. Well, I appreciate that, but the important thing is that your windstorm and hurricane deductibles, including tornadoes, may be different than your regular deductible, such as for fire, for explosion, and things like that. But
your windstorm deductible could actually be different from your hurricane deductible. There are companies that separate that out. So you can have a standard windstorm deductible, and your deductible could be specific, that 1 or 2 or 3% specifically for hurricane only.
Yeah, but you're gonna have to fight with your insurance companies. I'm for sure.
Not necessarily. There are insurance companies or policies that exist that deliberately separate those two things out. And that's what I was saying. You get with a good insurance agent. Mm-hmm.
Yeah, and I would recommend, when you're talking to your insurance agent, such as if you're talking to Ramona, that you ask for a policy that has a sole deductible across the board, because one, they're a lot easier to understand. Two, those policies generally are viewed more favorably when you're dealing with insurance adjusters and things like that, because the adjusters look at the policies, and you have somebody that has a $15,000 windstorm or a $15,000 hurricane storm deductible. They're already coming out with a preconceived notion that whatever the damages are, they're going to be below that amount, so we don't owe anything. And so you want to be able to take away all those preconceived notions that these adjusters have. You got to remember, these are folks that aren't required to have any specific training except in how to minimize the amount of the claim. That's the training that they get ultimately from an insurance company, is how to protect the insurance company's bottom line. So they do walk into these things biased based on the training that they receive. And as such, you're much better off if you come in and you can say, hey, I've got $1,000 deductible no matter what my claim is, because those guys then come out to that claim expecting to pay something. Now, maybe what they pay is fair, maybe it's not, but at least if you have a reasonable deductible across the board, there is an expectation in that adjuster's mind that they're going to be paying for something.
Right. Absolutely. Okay, thank you so much, Brother Carlos. You called me last week. I hope to hear from you again next week.
I will. And by the way, one insurance agent told me that the first thing that you do if you get by a policy is to go and read the exclusions. Mm-hmm. All the other language in there and it's so extensive, it's difficult to understand. But if you go to the section involving exclusions, you'll know what you're not covered for, and that will give you a guidance as to what you have to do to protect yourself.
And Brother Carlos, I work with a lot of people in the community. Some of them are not my policyholders. Some of them are. If you have questions about what's in your policy, you can call me. And you can bring your policy in, and I will explain any of the policy language that's in there. Yes, the exclusions tell you what's not covered, but you also need to look at the endorsements, the things that were added on after the basic policy form, because then those things may restrict coverage, something that is covered, but only under this circumstances. Like in your auto policy, it tells you we'll cover a replacement vehicle, but we will not cover if it's a truck where you can't see from the front of the cab to the back of the car.
Right. Guys, that's very important. Thank you for your information. You're quite helpful, and I will send people to you
Absolutely.
Because of that particular attitude. Thank you.
And call me, and we'll talk about those dogs. Okay.
Right. Okay.
All right.
Thank you.
All right.
Have a great day, sir.
Thank you. Okay. Well, Mike, we had a full day, and we're about to wrap it up. I want to thank you so much. You are Michael Derlingwanger. Did I say your name right?
You did. You did.
From Detroit, and you can go to
Dottrio.
Dottrio.
Dottrio.com.
Dottrio.
Yes.
And you can call his office at 301-971-4040. This is Mike Derlingwanger, and we appreciate you being on today. We will have you back again. You were most informative. Absolutely excellent. Thank you so much. Have a good afternoon.
You too. Thank you, Ramona. Have a good day. All right. Bye-bye.
All right. Look, this was a hot show today. If you didn't get any information about homeowners claims, fraud, incidences that you should look out for, contracting behavior that you need to monitor and question, you weren't paying attention. Listen, if you have any questions, we'll be back on next week. You can always call me at my office at 443-660. We'll be happy to review and go over everything. I want to thank Mike from Dottrio, Dottrio, Dottrio.com. I want to thank Mike for being on the show today. And my assistant has a question. What was that? Oh, what number? Oh, I'm sorry. His number is 301-971-4840. You can call us at 443-660-7131. See, this is why I need an intern, because my thoughts are moving so quickly and so much information at one time. I understand how the community feels. That's why I do this, so we can make things clear, cut, plain, with clarity, so you can be informed consumers and intelligently discuss the things that you need that create financial literacy and financial understanding and protect the things that you have. Next week, we are going to do a very interesting show. It is about water fraud. Now, I know you are asking what that is all about, but I'm going to tell you, I'm going to have a guest on here next week from New H2O. He owns a alkaline water spring company, and we're going to talk about how fraudulent information regarding food products, water, all of that can affect your health. And when you have health issues, it affects what you get rated for on your life and health insurance products. We're going to go over that in general and very specific. We're going to have a great opportunity with Mr. Paul Lucas from new H2O because this is Fraud Month. Next month, we're going to talk about those things that you should be thankful about in your life and how you should adequately protect them. The first show is going to be on wills and estate planning. And hopefully we're going to have an attorney on here with us. We're going to give him a call for the first week in November to cover all of that. Stay tuned. Keep your ears. Watch us on Facebook. Check us out on Instagram. Our Facebook page is facebook.com/Ramona Jones McClain Farmers Agent. Our Instagram account is Insurance Guru. And we're also on Twitter. But listen, you can send me an email at any time. What is the Instagram account? rjm.insuranceguru. We're also going to post on our Facebook page and on Instagram follow-up information. So we have listeners that want to talk to Mike, who is a public adjuster. Then we're going to make sure you can get his information. You can reach out to him. If you have any questions about anything, hey, give me a call. I'm not in the office every day, but they can always reach me. If it's an emergency, say, hey, I was listening to the radio show. I got a situation. I need to talk to Ramona. You can call the office at 443-660-7131. I want to thank all my callers for calling in. And I want to thank you guys for listening and being loyal listeners every week, making the show popular. Yes, send us referrals. We're going to help as many people as we can help. We're going to help you navigate through this insurance maze, this insurance industry, understand what's available to you. Even if I don't know, I know how to access people like Mike who can give me the answer. Okay, but the thing is that don't sit and let something happen and keep happening. Let it keep going and not call and ask questions. There is no question that's too stupid. There is no answer that's too long. And check me out soon. By the end of the year, we're going to be doing a podcast with all of this information. I thank you so much for listening. This is Ramona Jones McClain, and I am your insurance guru.